Finally, 2020 has ended, and I know it has been one of the toughest years for most of us. With the beginning of 2021, we will promise ourselves that we will keep all the negativity aside and will ensure that this pessimism will not affect us in starting the new year on a positive note. A good beginning will lead to a good end. Again, New Year is not about change in dates but direction. It is not about change in calendar but commitment. It is not about change in attitude but actions. So, with that note, let's begin 2021 by setting our financial priorities right. To all the Be Wise, Money Wise viewers, I wish you all a very happy, healthy, and a prosperous new year. Let us see what are all the 7 mistakes that you have to avoid in order to become 2021 successful investor. Most of us might begin investment without an end in the mind or without having a proper investment goal and without understanding your risk profile appropriately, like how we will need a GPS or a roadmap in order to reach our destination. Same way, we need to know our investment goals, which will help you give a right direction. Also, once you set your investment goals, it will ensure that you stay focused and disciplined throughout your investment journey. Sometimes we choose products or schemes without doing proper due diligence. It is very important that we check whether our investment objectives matches with that of the scheme or the investment that we are planning to put in our money. Always do the right amount of research or discuss with a financial advisor before you start an investment. Some of us might reshuffle investments too often. It is advisable that you don't take decisions based on rumors. Also, frequent churning of your investments will attract exit loads, and in turn it affects growth potential, and it also attracts capital gains. So keep it in mind that you don't reshuffle your investments very often.
Buy right and sit tight. You can buy mutual funds via SIP or lump sum route and leave them for long term so that the power of compounding and rupee cost averaging works well via SIP route and gives you the best returns despite market volatility.
Some of us might try to time the market, which is not really a good idea. What Mr. Warren Buffett says is, if you're not willing to own a stock for 10 years, then don't even think of owning it for 10 minutes. So invest your money using a systematic investment plan or SIP and stay invested for longer duration, and this way you can achieve your investment goals. Here, when I mean longer duration, you have to stay invested for a minimum of 10 years in order to see potential growth.
The best thing you can do to stay focused on your long-term financial goals is to remain committed to your investments right now.
Some of us might stop investments into SIPs when the market is falling. I must say, this is one of the biggest mistakes that one could possibly commit. Keep investing your money through SIP and let it tide through the market fluctuations. Keep a tab on emotions, especially when the market is falling. Also, the rupee cost averaging concept involved in the SIPs will turn to your advantage, especially when the market is falling.
Bear markets make a lot of money, they just don't know it at that time.
Some of us might try to put in all our investment into one product or one form of investment. I mean to say that all your eggs into one basket is a dangerous idea. All the assets do not perform in the same manner every time. So you got to diversify your assets across equity, debt, and gold. Some of us might not consider the impact of inflation on returns. The average inflation rate in India is somewhere around 4 to 6% every year. So if you choose to invest in FDs or RDs, then it will eat up your returns. So you have to choose such an investment which can beat the inflation and give you better returns in spite of inflation.
To be precise, FD is safe if it is for 1 year and dangerous if it is held for 10 years, whereas equity is risky if it is for 1 year and completely safe if it is for 10 years and above.
I hope you keep all these 7 points in your mind before starting a new investment in 2021. Keep your financial priorities right and set your financial goals high. And with that note, I'm ending this session. Wish you all a happy new year once again.